This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, good morning.
Good morning, both of you. I think that's the most important cue. Middle of the week, we're halfway there. It gets better from here.
Indeed. But it's going to be, I think, quite an interesting trading session. That broader market underperformance, that's actually coming into play now. So let's see how long it lasts, because that's where the big party has been.
Absolutely. And I think let's kick it off from where we left off yesterday, as we always do for our viewers. So you basically had the market yesterday, which creeped up. I mean, it looked like it was not going anywhere for the first 1.5, 2 hours or so. And then in the second half, it moved up steadily, ending about 1/3% higher. So it was a small dip. I mean, if you're looking for dips, it was more like flat, slightly lower on the day in the first couple of hours of trade. And then that small intraday dip was bought, and we ended about 60, 70 odd points higher. Overnight markets, they were relatively unmoved. And I'll tell you why, despite the trio weaker US data. Now, it's kind of depending on, I guess, which side of the bed you wake up. It's good is good or good is bad is good, etc., etc. I'm talking about data and what the market makes of it, right? I mean, good data, hot data, strong data essentially means that rate cuts are pushed out and vice versa. Last night, you had US data, 3 of them data points, which actually came weaker than expected. Durable goods was weaker. You had the Consumer Board's consumer confidence numbers, which came through, and the Case-Shiller home price sort of numbers, which also rose, but rose lesser than expected. So weaker than what markets thought. But you had, the reaction which was, as I said, largely unmoved. Equities moved up. S&P was up a little bit. The Nasdaq was up about 0.37%. Basically a reversal of the day before yesterday's price action, where markets had dipped a little bit. The 10-year actually went up 3 basis points. We're at about 4.31 on the 10-year. You also had the dollar index, which held steady and flat, just under 104. Oil prices, they've also moved up to, $83.50 a barrel. I'm talking about Brent oil prices. That's something to be watched out for. I mean, actually, both, what's happening on, the U.S. yields and dollar, to my mind, become very important. Just one more thing. This U.S. government shutdown business, we hear about it at least 2 or 3 times a year. But that's back again. I mean, it comes and goes. But for what it's worth, the U.S. government, without a spending bill, will partially shut down on the 1st of March. Now that hopefully the spending bill will come, like it has sort of always come, and things will move on. But it creates a bit of uncertainty for that period, for the next couple of days or so. The U.S. House Speaker and other politicians are working to prevent a shutdown. And as I said, odds are in their favor that they'll get this done. Now, on the upside, let's just quickly recap the levels and tell you what the market needs to do. Basically, we need to take out 22,297, which is about 100 points away from where we are. We left off at 22,198. So 22,297 is the first level. And then, of course, I mean, it targets, the level you will project higher is above 22,500. I mean, if the march upwards has to continue without a halt, the immediate target is 22,538. On the way down, the support zone remains the same, which is 21,900 to 21,700. The precise numbers are on your screen, which the Nifty needs to defend. Now, Bank Nifty saw an absolutely flat day yesterday. It's almost like it's wasting time before it picks up and decides what it wants to do. For the Nifty Bank, supports come in at the 40-day exponential moving average, which is the closest level, 46,300. And then the 20-day moving average, which is 46,130 or so. The Gift Nifty will come up on your screen. Buying the dips has worked. It's worked yesterday as well, notwithstanding how small the dip was. This morning, the Gift Nifty is indicating about a 17, 18-point higher start. Surbi.
Oh, absolutely, Prashant. I guess so with the kind of domestic money that's been coming in, I mean, it's no surprise that these dips are getting bought. At least that's what the market has been doing all this while. So just to add a couple of points over here, the range is intact, but, the good thing is that we managed, despite all the volatility and the intraday choppiness, we managed to close at the higher end of the range. So 22,200 is still very much in play. Just to talk about the flows, because we don't have too many big cues or big triggers that the market is right now acting upon with earnings season behind us. So it's all about the direction of money. And that direction of money from the domestic institution side is obviously on the inward side. Yesterday's number was over 2,800 crores. But do remember that a lot of blocks are happening. Yesterday was the big CMS Info block. So that skews the number. But anyway, for what it's worth, whether it's block deals or just pure money coming into regular stocks, it's all on the way up. FIIs were net sellers once again. They sold stocks worth about 1,500 crores, which got me thinking, let's just size up the tally for the year. Remember, this year started with the big premise of major FPI buying coming into the Indian markets. Guess what? That's missing till now. January was negative 25,000 crores. February is not negative, but it's not much positive. We have one more trading session left, two more trading sessions left, and we are less than 1,000 crores up from the FII fraternity. In terms of sectors, there's absolutely no clarity, and there is no consistent sector which is on an uptrend. There's daily rotation that's been playing out. Yesterday, we had IT come back for a bit. Banks were sulking once again. There was a little bit of buying in pharma. So no clear sectoral trends. PSUs, by the way, even there, things are getting very mixed. It's no longer a unilateral, one-way rally. There is periodic profit-taking, even in the PSU lot, must keep in mind. So since we're talking about sectors today, purely from a news flow standpoint, because it is all about individual stocks and news flow that's driving the action. Today, I'll watch out for the telecom space, and that's because of two reasons. One, of course, is Vodafone Idea's board has finally approved this big fundraising plan, 20,000 crores in equity is what they're talking about. Promoters will also chip in. We need to see who the other investors will be and more details on this, and that will play out as, we go along. The second is Mr. Sunil Bharti Mittal. He was speaking at the Mobile World Congress in Barcelona. He's made some big sort of statements. He's saying that he expects Bharti's enterprise business to move from $3 billion to $10 billion. That's the kind of potential that he's looking at. And he said that they want to exit a lot of the non-core businesses like insurance, food delivery, etc. So he wants Bharti to be a digital play. The core telecom business, the payments business, that seems to be the big focus area. So while we are sort of, playing within the boundaries, Nigel, I think telecom is at least one thing that I'll watch out for.
Well, that's right. In today's trading session, I just want to highlight three big points that I'll be tracking today. In the last couple of days, we have been seeing that the headline index, well, that's been doing pretty okay, but there is some pressure that we're seeing in the broader market. So first up, you'll have to say on the headline index, that's the Nifty and the Nifty Bank, the uptrend is intact. The 20 DMA is a reference point on the downside. Last couple of days, as I said, the mid and the small cap indices, even yesterday, intraday, the mid cap and the small cap indices, they lost their way a little bit. So do they want to pause for a little bit longer? That's another point. And finally, post-market hours, we'll be getting in the Nifty changes. That's what the NSE has said. The committee will be meeting. So I'll be tracking a few stocks out there, and I'll get to that in just a bit. Well, in terms of, the other quick data points that we should be looking at, the FIs, what do they do? Well, they added more longs than shorts. Not too much movement out there. Continues to be in that vicinity of around 45% longs and 55% shorts. Moving to the other important points then. The 22,200 call, 22,300 call. Between them, there was a good amount of open interest built up. So the sense you get is there is writing being seen at these levels. The bears believe they've got this covered at around, at around the 22,300 to around 22,350. So that's the resistance level we're looking at on the upside. On the downside, the 20 DMA, as I said, you'll say this uptrend is intact till that level is holding out. And similar is the case with the Nifty Bank. Because if you plot a chart, you'll see we're bang in the middle, just a little bit below that 50 DMA and a little above the 20 DMA as we speak. What the bulls will want is the Nifty Bank gets past that 50 DMA and then makes a dash towards 47,500. As we have been saying, though the Nifty is nearing its fresh all-time high, you have the Nifty Bank that's close to 3.5% away from those fresh all-time highs. So if that can get up and going, that's what will push the Nifty higher as well. The stock that I'm tracking for the day is Shriram Finance. Yesterday, you did have, a lot of volatility out there. And the NSE indices, they're, schedule a meeting for post-market hours, so we'll get the outcome out there. Most brokerages or alternate research, Novama case in point, they have plotted out that Shriram Finance is likely to be the most likely inclusion. That's what they have said in their earlier notes as well. But yesterday, we saw a little bit of volatility and there were short rollovers being seen, particularly in the March series, not for the February series. So the rollovers were on the short side. But the post-market hours, you didn't get any new stocks that came into the F&O list. That was the fear, that if there is a new stock that comes in the F&O list, then Shriram Finance may not make it. So maybe we see, that stock in focus. Maybe it starts off a bit in the green. Valuations are in the favor, but importantly, will it get included in the Nifty? That's the most important trigger, and that comes post-market hours. So owing to the short build-up we saw yesterday, and owing that we didn't see any kind of new F&O entrance, maybe this chances still stand that it gets in. Let's see how this goes.
Okay, all right. Well, Nigel, you come back out over here, but we'll watch out for those cues and, of course, some of those important levels to track for the index. With that, let's move on and kickstart the show with the equity call of the morning. Vikash Jain of CLSA says that after a 40% jump in 3 months, the BSE PSU index is nearly the most stretched in a decade on key valuation parameters. He says while the playbook of the past 2 elections suggests top for the PSUs only by June, stretch valuations makes us selective in the space. He says their analysis shows the financials, commodities and the utilities sectors make up 85% of the free float market cap of 82 listed PSUs. He says banks and key commodities are the most stretched amongst PSUs versus peers, while they see relative value in power utilities and like themes such as defense. Vikash says ONGC, Oil India, Coal India, NTPC, Power, Finance, BEL and HAL are their preferred PSU stocks. So that's how CLSA is playing the PSU.
All right, well, that's Vikash Jain of CLSA. Let's get you some money market views now. This is Pankaj Chitlangia of First Basis, who says that resistance is near 104.5 levels for the dollar, is expected to halt the gains there, leading to a gradual decline towards the 103.25 levels. He says, supported by the RBI intervention and minimal events, the USD INR is likely to continue its downward trend with resistance at 83.05 to the dollar. He says the weekly Bollinger Band have started expanding when the USD INR has been closing below the 20-week exponential moving average for the last 4 weeks. And this increases the chance of it dipping below 82.7 to a dollar, triggering further fall in coming weeks.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7.04 to 7.08% during the week. He says in the absence of any GSEC auctions, the market traded in a narrow range, taking cues from global yields. He says the MPC minutes were in line with market expectations, reiterating the wait-and-watch mode on inflation. He expects the 10-year benchmark to trade in a band of 7 to 7.10 for the current week.
All right, we have a lot of stock-specific action to track today, and we get to that in just a bit in our special Top 10 segment. We're looking at Vodafone Idea, Indus Stars, Vedanta, Bharti Airtel, Torrent Power, Salazar Techno, CMS Infosystems, Texmaco Rail, and GET&D. Well, that's a long list, all of them likely to open up in the green. On the flip side, Capital Small Finance Bank could be reacting to negative news flow.
All right, well, that's basically the lineup of stocks you'll hear on in just a bit.